Hello, I'm Steve Williams. I'm the non-executive director at Capright, and with me today is Jonathan Rivera, who's our expert in the apartment market. Welcome, Jonathan. Can you tell us briefly first about your background in the apartment market?
Yeah, I've been working with apartments and appraising apartments since 2006. And I first started appraising garden suburban apartments, mostly in the Minneapolis and Chicago markets. But over the past 17 years, I've done a lot more with mid-rise and high-rise buildings, mixed use, and in pretty much every region in the nation at this point.
Wow, impressive. How has the occupier demographic and the flow of demand, how has that changed?
Yeah, overall, demographics of tenants haven't really changed that much. What's interesting to note is people are putting off home buying longer. So young people, due to various reasons such as home affordability, home pricing, as well as student debt, are putting off purchasing homes and remaining as renters, which has further pushed up demand in the market.
But overall, if we look at the housing shortage across the country, would I be wrong to characterize this as a golden age for apartments?
It's certainly a golden age for those who got into the market earlier than maybe, say, the past 5 or so years. There's been tremendous rent growth. Occupancies have remained very strong over the past 5 to 10 years. The thing is that more recently, prices were pushed up quite a bit during the low interest rate environment of 2020 and 2021, and now with interest rates back up again, it's making it very difficult for investors to get into the market.
So apart from the cost, the high cost of debt, what are a couple of the other risks for investors in the apartment market at the moment?
The largest risk for apartments is mainly unemployment. At a time of recession, when there are large job losses, it really starts to put a strain on demand. Other risks that the market faces are obviously real estate taxes, which have gone up quite a bit in certain markets, and as well as insurance. Insurance has seen pretty high increases in markets that are most susceptible to disasters caused by climate change.
Okay, what about the future? A brief word as we close about the continuing health of the market.
Yeah, things look pretty bright for the future of apartments with relatively limited supply and consistent demand, with a relatively healthy macroeconomic outlook, which should additionally drive demand. The market looks very positive. Overall, I think looking further into the future, you're going to see a lot more urban mixed use development, more transit oriented development with less parking, larger amenities, with co-working spaces, and probably more green buildings with renewables and higher efficiency.
Yeah, well, thank you for that. We're in a world of change as always, and at least we're both, I think, fairly positive about the outlook for the apartment market.